Massive, it's yours truly, Trade with Nico. Welcome back to the YouTube channel. I want to share with you guys how I trade options. Everybody trades options a little bit differently, and I want to share with you guys how I trade options in an animated form. So if you guys are interested in figuring out more detail or learning more of how I trade options, don't forget Creative Living, trading 1 hour a day, the ebook, great reviews from the ebook. So if you guys want to get that, the link is in the bio. Let's kick it to the animation. Boom! What's up, trading family? It's yours truly, Trade with Nico, and I'm here animated, wanting to share with you guys how I trade options. So as many of you guys already know, my instrument of choice is option contracts. And it could get a little bit confusing at times as to what contract to choose, what strike price, and they have a bunch of things called the Greeks, which at times can be very confusing to new traders. So I'm going to share with you guys what I look for and how I trade option contracts. So there are several Greeks that make up the price movement or the premium movement of an option contract. But the three major Greeks that I pay attention to are delta, which is a measure of change in an option's price, that is the premium of an option, resulting from a change in the underlying security. Gamma, this measures the rate of change of delta for an option with respect to a move in the underlying asset. And number 3, theta. Theta measures the rate of time decay in the value of an option or its premium. I focus on those 3 option Greeks because I'm not in trades for more than 10 minutes. And those are the real Greeks that I feel that impact the premium movement or the price movement of the options contract. So when I'm choosing the option contract, I tend to pick contracts that are at the money. What do I mean by at the money contracts? Say the stock price of Apple is at 169 and I'm looking to play an upside break. On the option ladder, there is a 169.50 call or a 170 call. I'm more likely to go and pick the 170 calls. Even though the 169.50 is closer to being an at-the-money contract, over the years of trading, I tend to notice there's more liquidity and volume on the whole number options as opposed to the half contracts. I want to make sure there's enough room and enough volume on the day. I also don't trade contracts which have more than a 5-cent spread in between the premium price. I try not to get into contracts with those wide spreads because entering the wrong contract will automatically put me at a disadvantage in the trade. Remember, like all things, not all and every option contract is tradable. Guys, love the video. You know how it is. We're keeping it with the animations. Leave a comment below. Subscribe. Click the notification bell if you find value in the content. It's Trade with Nico. Boom!